Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix.
Marco, how are you? Can you hear me okay?
Yes. You good? Your internet is better?
Good.
Yeah?
Yeah, my internet was a little bit messy this morning. But
Okay, so
yeah,
Felix,
there's a big snowstorm. So,
yes.
Go ahead.
Yeah, I was just going to say, there's a big snowstorm, so if Felix just shuts off immediately,
You can take over.
And if he doesn't come back, we might just call it a day, but hopefully we're going to be able to do a full session today and get it going. So that's that. And another thing is something I wanted to mention. I forgot. It's fine. GME. All right, GME. So my question about GME is,
it just started moving again. I just watched. I can't stop watching it. It's like a train wreck. This thing.
It's crazy. So, my question is, what's the worst that can happen, right?
That's asking a big question here. I literally was just looking at this. It's like it went from 94 to 114 to now it's back going on the other way. It's so crazy. Well, look, this is just supply and demand right now. I think that you have to be. I think that if you're going to play this game, you got to be very careful. I think that the way the market makers are going to make back their money here, what's the worst that can happen? Okay, so the worst that can happen, what do I see the worst that can happen? From playing this game a long time, the worst thing that can happen is that now everybody expects GME to move, $50 to $100 at a clip every day. And it's seemingly moving a good amount, today but it, to warrant 200, 300 volatility, the thing has to move around. So the worst thing that can happen is that it could actually trade from 70 to 110, back to 70 to 110, back to 70. And all of these options premiums, can get destroyed, right? So if you're long options, long puts, long calls, want to play it either way, many people are using the options. I think that you have to be very careful, and it's not a product that I would use for this name for a period of, let's say, I want to hold this for two months or 6 weeks. This, if you're going to play the GME options, you can have fun playing with them for 5 minutes, frankly. I mean, this thing is just moving all over the place. And if you are playing them, you'll see that even on, if you're playing them quickly, you still need, with 300, 200, you still need massive moves to move. You buy an option for $23 and it moves like $10 and you've made only, a couple of dollars, a few dollars. So it's not like, you a regular stock where you catch something for $20 and you make 5 times your money. This, you're going to make like 20, 30%, 40% or something like that. You're paying a lot to play that game. So you just want to be very careful. My impression on a lot of this stuff is that once a big move happens and it's shaking around like this, what happens is, and that's the bear flag or the bull flags that you see, where you see this consolidation over a digestion of this move over the course of, let's call it, sometimes 8 weeks, 12 weeks. And you could just see it like a cone where the volatility is not really, everybody catches up. Everybody's long calls waiting for the next big move. Everybody's long puts waiting for it to collapse, and it does nothing. And when it does nothing, it's doing nothing because everybody's now in there, right? The stock is basically moving. Options are a big mover of this stock. So more people are playing options. When you're buying and selling, a lot of people are buying options here because I think selling, there's some people probably taking a shot at selling, but at the end of the day, that back and forth of day trading is really what's going to keep this stock in some sort of range. That's what I could see happen. And I think that's something that, I think people playing in this game should understand. I don't mind you trading options in it. I would say no more than 2-3 days. Like 2-3 days in GME with an option is like a lifetime. Okay, so
Right.
Buying a 2-month option in this thing is like, wow, at these prices, right?
be honest, when I was
Before-
looking at the UOA today, I see a GME, I just skip it. I don't even bother. Like
it's crazy.
Oh,
It really is. It really is crazy. But there is some other stuff. There's a few things that you had pointed out to me just before. So, let's look at them. Let's tackle them one at a time. I think the big announcement today was on the Joe Biden make an announcement, right?
Yes,
He
yes, on
said
EV, right?
on EV, right? He said that they were going to let's just take a look. I saw Workhorse, which was out of favor for a while, and now that is actually here, WKAH. You see my screen?
Yes, I do.
Okay, so Workhorse, let's take a look.
Mhm.
So Workhorse trading up $7 on a big news. But let's one thing, which one comes first, the options or the options or the stock? Well, if you're looking at this Workhorse for the last few months, it had this huge move, and then you just see this. Let me inspect it. You see this digestion here we just talked about. I'm gonna mark it up a little bit. So it has this move here, right? Digest for 2 months, then has another move, and really over the last, let's call it, what is this, 4 months? October, November, December, now January. It sort of has this thing forming here, and it's breaking out here today. But this breakout, so now the question is, excuse me, the question is why is it breaking out today? And there's actually news, today, and we could see that news, and I think people understand very quickly. I just pulled it up before. Why is Workhorse Group stock popping today? Here, Joe Biden makes a comment saying that the federal government also owns an enormous fleet of vehicles, which are going to replace with clean electric vehicles made right here in America by American workers. Okay, $6 billion contract up for grabs. If I remember correctly, it was Workhorse, Nikola, an Indian company, and another company from Michigan. And the idea was that when they were going up for this, that Workhorse was, based in the United States. So it was, by America, American workers. So that comment, by American workers, sort of shuts out the Indian company that was up for the bid, and maybe shuts out the Michigan company that was up, this private Michigan company, because they were backed by I believe someone that was international company. So you have really Nikola and I believe it was Nikola and Workhorse.
And Lordstown as well.
Lordstown. Okay. But Lordstown has, I think, an agreement with one of those. I think Lordstown and Nikola. I have to look that up. But
maybe they didn't get it, but they say the stocks have jumped. So
yeah.
maybe
So
people
what
don't really
I
know.
think I think what you want to get from a lot of these articles is not so much not so much always the opinions, but I think you want to get the facts. And here's a good fact that I would steer towards is, there's 645,000 vehicles according to 2019. I would just verify some, go and maybe verify that, but only 3,200 were electric vehicles. So, there's your story, right? We always talk about what's the story, where, how do you get investors to dream about what could be? Right? What could be? Well, how does the company make money? Why is it exciting today, right now? Well, the company makes money by selling these EVs. Workhorse is targeting, it looks like your post office mail delivery truck, right? And the one that pops up in front of my house is very old, and so they're refurbished for decades. So now if they're switching it to EV, again, this is the story. 645 vehicles. There's only 3,000. You get a contract to do 643,000. Bam, Workhorse is a real company. They're going to get part of that contract, and the stock is off and running. Okay, so in a nutshell, that is the high level story. Now you can go look at, is the management team good? How much money do they make? Can they do more than just this? Is there a bigger opportunity? Blah blah blah. But this is what was going on back in July of last year. July, August, September. That's what the story was when it was starting to move up over here. And, and without an announcement, it's not ready to move up. Now there is an announcement. And so you got here. So we have this announcement. It's breaking out of this technicals. It looks pretty good. We can take a look at let's take a look at the options. Which ones are they buying here? They're buying. So again, we don't really look at, with such a big move, they don't have the strikes yet, but we don't really look at this 2-3 week stuff. A lot of the times, it's very difficult to come to a conclusion as to what they're doing here, because there's good news and the stock is up. It's highly likely that a lot of this stuff is call spreads, and we can look at it. But at the end of the day, it's more of a day trading mentality. 1 day, 2 days. What we're trying to do is try to find where there is some trend, some potentially bigger trend. So we can look at February. That's a little bit juicier options. But we're seeing here the Feb 30 calls that were traded 10,000 times today, 35s, even the 40s. You can look here at the Aprils.
You get the earnings as well.
And you get the earnings here. Okay. But these companies, to be honest, like, earnings is good because we get to hear the CEO, but we're not really banking on earnings. The company doesn't have any earnings, frankly.
Right.
It's this contract. It's the future earnings. It's what's to come. And
Mm-hmm.
for a lot of these names, remember, it's the sexier the story, the more people can buy into it. And this is it is now a good story. If Biden says that, I mean, look, I told you the story. You can repeat it, right? Biden, there's 600 plus trucks that we own. He's going to turn them all to EV trucks by American workers. There's only 3,000. That means there's about 600,000 of these trucks to go. Workhorse gets the contract. They're only worth this much. And man, this thing could go to 100. I don't know where to go, but I'm saying that's sort of how people think about it, right? So we're looking, we're looking around here, and with the implied volatility so high, we're looking to see where the volume is at. But if you're going to look at the 35 calls out to April, which gets to March, and you're looking at the 40 calls here, somewhere around here. I mean, it's not cheap, right? 141 volatility for 4 months is 3 months. What's that? February, March, April. 3 months is not going to be cheap, right? And so you're looking at 63. So if you had an idea to say, all right, I think this is going higher, you need something like a $76 price target to sort of want to pay up for that. So can it get to 76, right? If I'm looking at the 40s, or right, it's trading 35s, but I'm trying to get a $5 option. And the question is, can it get through $40, right? That's sort of what we're trying to ask ourselves. And if you have here 31, 16, so 16 seems like, for whatever reason, 15, 16, there's a buyer. Okay. 15 to 31, that's 15 to 40, 15 plus 30 is 45. I mean, this announcement, if it's true and they're going to actually hand out the $6 billion, is, this could catch fire, right? There's a lot of money at stake and billions of dollars of revenue in a contract with the United States government, and then have other, it's not just you do that and then you become a contractor for the U.S. government. You're getting bids. You're giving bids for other projects. So this is one of those names that could start flying, right? You now have a story, and reality is not until the bids come. So there's always going to be this possibility and this thought that, what could be. So can it get to 70? Why not? I mean, any of these stocks, you see how a NEO goes, and, you see it. Well, even better one, let's say Nikola. A Nikola went from 22 to 92 before the CEO had his problems and the stock has come off. Now the stock has made a little bit of a jump here. This has a little hair on it, Nikola. I'm sure they're buying calls in Nikola too today. Has a little hair on it, but the Workhorse doesn't have as much hair on it. So if I had to pick the two, I'd pick the one where there wasn't this idea where people are trying to claim fraud and they're not honest. They're showing commercials. Nikola's showing commercials where they actually push the truck down a hill, and of course it runs because they pushed it, but they haven't produced it. There's a lot of stories behind that. I'm sure. I don't know if they were proven untrue or true or whatnot, but at the end of the day, the CEO had some problems, resigned, and he's the visionary of this stock, and that's never a good thing. And this stock reflected that. If they're coming in and they're going to win part of this contract, so be it. But, out of the two, I think Workhorse is, and by the way, this is a lot of damage to a stock, meaning people are getting long, they're buying. This causes a lot of damage. So you have a lot of people that are still long this Nikola, hoping to kind of, sell it, here, 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 here as it's going up. Workhorse is a stock that has been constructive. This is a different chart than Nikola, right? This is up, steady, right? These people are looking for long-term vision, right? It trades all the way up to 32, trades all the way back down here. They want to buy it. They want to own it. They're telling you 15 is the level that they would buy more. It comes down to this level, and, it keeps bouncing. Then it's 20, and now it just takes off. So, I think Workhorse is the better chart, and you're seeing the options come in. So, I like it. It's just very expensive to play 2-3 month options. Very expensive. Like the stock has got to double, and you make 275%, and it's got to double in 3 months.
Not a great risk reward, is it?
Yeah, that's why it's pushing you. That's why it's pushing you to a higher target stock price. So I got to get to 76, and on the 39.40s, I'm going to make 500%. But I'm taking a big risk of buying the 40s already. It's literally okay. Let's look at our break even. Our break even is 45, so it's $13, which is 40%. The stock goes up 40%, and I still don't make a penny. It's got to literally go up. It's got to shoot up. And so, look, this is the game that you're playing. Can it do that? Of course, but they definitely make you pay for it. So I see what they're doing here. It looks like they're buying the February's to get some, like, the momentum's now in it. And they're even buying, February 5th here, right? Which is Friday.
Yep.
No, next Friday, 2 weeks. So they're buying 2-week options. They're buying the 32s. Like, I mean, you're doing the right thing, right? If you're looking at this name and this is the news you're waiting for, and now's the time, I wouldn't be upset to see you buy. Okay, you like the name and you don't want to. April's is a stretch. To me, that's a stretch, but the news is out. Maybe this comes down to up 4 or 5, and then you jump into the 32s at like $3 or something like that. Like, it's up already 30% for the day. Not saying that tomorrow can't be up another 10, but I just don't like reaching, and I don't like reaching when the vol is going up, and I don't like reaching when the stock is going up. It's like, it's a double whammy that if the stock retreats tomorrow, you're going to get beat on the you're going to get beat on the not on the, well, you're going to get beat on the price. The stock is going down. Your calls are going to go down. And then what's going to happen? Everybody who bought calls today, because the stock goes down tomorrow, they just sell them. And then the market makers, Citadel, just, what we talked about in the Robinhood video that we have, how they make their money. They've pushed this vol way up. Look, the changes, you see it right there on the screen, 37, 38, plus 50, plus 75. So they move the vols up. As people buying it, they move it all up. And they say, hey, okay, you want to pay for this stuff? We get it. We see the story. Here it is. And everybody's buying, and the stock is going up. If the stock comes off tomorrow, what do you think most of these people are going to do? Oh, there'll be 30% of them will sell it. They'll sell the calls, and they'll move that change in volatility. Tomorrow will be down minus 15 or minus 20. And so that's, they're making that money off the difference in this number on the left here, that implied volatility number. That's how they're making their money, and sure, for 2 weeks, it's not, a move of 20 volatility points is not huge, but if it's a penny, 2 pennies, it's still 20 to 40 cents, so this is how they're making their money, and this is why I like it. I don't want you reaching. I would hate to see you reach for it and you can get double whammied. Maybe if you had 3 to buy and you say, all right, well, I'll buy 1. I hope that I'm losing on the others and it can come back to $3, and then I'll buy the other 2. That's smarter. But if you only have 1, right now, I would say let's hope for a little bit of a pullback. Okay, so it's about patience. It's about not trying to reach on implied volatility and reach on the stock. If it went up, if the stock went up and volatilities hadn't gone up that much, well then, and it's moving up $1, $2. Okay, then you can get in. You know what I mean? But reaching on both. How about this? Reaching on both when the stock is up more than 5-10%, it's up 30%, and then the IV is up, 37 vols on 100, and that would be 124. The IV's up 30%. Okay, so the IV's up 30% and the stock is up 30%, and now you're going to get in. I would recommend that you don't do that. I would advise you not to do that. If you have 3 and you really feel like, no, this is the news and it could go up 10. And I believe that this could have legs because this is what they've been waiting for 6 months. So, it could have legs. You say, all right, I'll just nibble. I'll buy 1. And that way I won't be totally upset if it's up 10 tomorrow and I miss it.
Right.
You understand? It's always about being smart. It's the balance between being smart and managing what's up here between the ears. Right? That's that balance. And everyone is different. Everyone is unique. Someone doesn't buy it today and it goes up 20 tomorrow. They're able to say, you know what? I don't do that. I don't reach on. There's a million options you could reach. There is literally a million. So, why reach for every single one? It's not possible. So if you have a process and you stick into your guns, the best decision you can make is what you see in front of you. Tomorrow, if it's up $20 because everybody, is like, we're in, and you miss it, hey, you know what? You made the best decision at the time you had it. What happens next? Nobody knows.
Nice.
Right?
I like that. That's good. I'll remember that for sure.
Very, very important. It's the way you fall asleep at night. It's the way you fall asleep at night. You just say, did I make the right decision today? Yes. Okay. So you know what? Then tomorrow, whatever happens, happens. But I made the right decision. There's sometimes I'm like, I go home and I think, I go to bed. I'm thinking, if I'm even thinking like nervous about what's going on, I can't stop looking at futures at like 2:00 in the morning, or I wake up and I'm like, well, what a future? That means I'm too big in whatever I'm doing. It's just, I'm too big. And my body, my mind is telling me it's too big. You have to, get to a level where you're calmer, where you're not worried about each tick, whether it's going to go up and down. So that's very, very important. There's the game. And then there's this between your head, between your ears, up in your head, where, that is a very, very important part of this game. So you always have to manage. For some, like I said, some people are going to take it. Some people are not going to take the workhorse, and some people are going to say, I'll do 1 and I hope I lose so that I can buy it cheaper because I really love the stock now. Okay. So let's go to the next one because there's a couple other ones that were interesting.
Nikola.
You want to do it? Well, let's go through Nikola just real quick. Let's just see what they're buying because we showed the chart and which ones are they buying here? They're active in these. February. Yeah,
35s. Yep.
So they're 35. So again, they're buying the high strike that's available and they're paying $1.50. So we can click here. Okay, we see that they came in the morning. The stock was trading 21.5. It's trading coming up to 25-ish here. Okay, so they came in and you saw the volume from the get-go. So the first thing we're looking at, we want to find buyers. We just want to make sure that they're buyers. So they're buying, looks like from 9:30 in the morning, 9:40, 9:50, 10. Okay, they're buying. Now, stock is, let's look at the IV. The IV is going up, which is a good sign. We see the board already over here. The IV was up. So good sign. The IV is going up. When you're buying calls, it's natural that the stock would go up because they're buying stock with calls, and in lieu of stock, they're buying the call. So the market maker, myself, if you bought them from me, I would have to actually buy it as a hedge. So that's good. That's pointing to upside. Let's just go down here. Okay. I want to check the highest volume. I can check the 950, 10, 1050. Boom, boom, boom. Looks like on the bid, again, this is sort of the last check I do. I'm basically checking, is the IV going up? Where is it trading? From where it was yesterday, and it was trading a lot higher. I see some spreads here, which, the spreads, it's very difficult to determine whether bid means actually they were sale or offer means they were a buy, because spreads could be traded at any price as long as the spread price is the same. So they, you can buy a call spread for $1 and it can trade on the bid, or it could trade on the offer, and it could still be $1, right? So you can't really tell sometimes.
Right.
So that's a spread there, but it looks like the premiums are going up right from the get-go. Yep. As they should. The stocks are going up, being pushed up. The IV was actually going up by 945 significantly. Okay, so that just started it, and the stock followed. So I would say these are generally buyers. Looks like here, once it got to, and again, there's day traders, right? So once it gets up here, stock goes from 21.5 to 25.5. What do you see? You could probably see that the implied volatility now is starting to drop a little bit, which means that some people are probably trying to take some profits. They bought it here. here, and now the implied volatility is dropping, which means they're probably trying to sell some of these calls that they bought earlier. Is that fair?
Yeah, that
Right?
makes
People are
sense.
day trading these options. Not that I recommend that, but people are doing that. I sort of look at playing this game, the unusual option activity game. I'd rather see you play a little bit longer term, a little bit longer than,
Right.
February is okay, and especially in something like this, but
But a name like Likala, I think people lost trust in the stock a lot. So I mean,
yeah,
I don't see them investing long term. Just my
I'm
opinion.
not. Yeah, I'm not sure, to be honest. I don't know a lot. I know the high level stories, but I just want you to see how the implied volatility is going up, and then it starts coming off, which is indication of selling. So, and that tells me that you buy 1,500 call options for 85 cents, and then all of a sudden it's trading. Later, let's go to where it's right now, 85 cents, and then it's trading up towards $2. What are you going to do? You're going to sell some, right? You just made 130%. So, what do we tell you? What do I tell you to do? At 100%, you take some off. And so there they are. People are taking some off. They made good money right off the get-go, and there they go. So, it's interesting. I mean, look, they're buying the 35 calls to get to the 35 calls, Now look, some of these, see that these are spreads here, so you might even be getting some 1x2s here, which on that 500, somebody could be buying 25. Somebody could be buying 250 of these and selling 2 of the 35s, which is interesting play too, but you leave yourself open to the upside. So you would pay 365, and then you would sell 155 twice.
Okay.
So that's 155 twice is 310. So you can pay 55 cents for this, what they call 1x2. You buy one of these 25 calls, you sell 2 of these 35 calls. So you buy one of those, you sell 2 of these. What you can do, the easiest way to figure it out is, what do we say? We're going to pay 55 cents? 55 cents on this, right? So keep 55 cents, leave that out of the equation now. And all you have to do is take 25 and 35. What's the difference? $10, right? And then you just add $10 to the 35. So that's 25, 35, 45. And then you got to say, okay, 45 less the 55 cents. So that's where you start losing money. Okay, that's where you start losing money. You start losing money at 45 minus 55 cents, which is $44.45.
45, right.
Yeah, 45. That's where you would start getting short, Nicola. And somebody would say, well, it's not going to go to 45 in 7 weeks. Tell that to the guys at GME, right? So, it could. That's the game. And the market is saying it's 150 vol because it can move that way. So don't ever think that it can't. The impossible can't happen. But it looks like a good trade if you're long the stock. So if you long it here at 24.89 and you do this 1x2, then essentially you're basically buying this 25-35 call spread for 55 cents. So that is, if it goes to 35, you make literally almost 18, 19 to 1 on your money there. That's huge. But you're then giving up. You're giving up what? You're giving up the stock at 35. So 25, call this 25 to 35. That's another $10. So you're going to make $10 on the stock. Then you got to give it up, and you're going to make $9.45 on this call spread. And that's it. It goes to 100, you're capped at that gain. But when there's, this is skew. When you have skew all the way here, what does that mean? That means these are bid. These are better bid than historically. It's basically trying to give you an idea that, hey, those upside calls out there, they're pretty big. People want those upside calls. So if there's a strategy that you can do to actually get long and sell those, then it might not be it might be a pretty good play. So on top of that, the skew is hot, the skew is low, calls a better bid, and the at the money implied volatility is leaning on the high side. So let's find a strategy where we could actually sell the upside calls and potentially sell a little bit of this high implied volatility, but we're able to lean long on the direction. So this is that type of trade, the 1x2. So it's not surprising that you see big volume, 5,000, 4,000, 5,000, 14,000. People might be doing these types of trades.
Interesting. Okay. Nice.
All right. Good. So
and
that's
then, that's Nicola. And then one more related would be a VLDR, I guess.
Oh, the lasers.
Yes,
VLDR.
lasers.
Hold
Right.
on. There you go. VLDR
Yeah,
up.
yep.
Oh, only up 6% today. That's normal.
Only. Right.
Stocks move up and down so much. Okay, they should, right? So another way to think about how much they should move. Now that I just said that, you can take this number, whatever the implied volatility is, and you could just divide it by 16,
Okay.
and that gives you sort of an idea of how much the market is expecting per day.
Okay.
Okay,
So
so
that's
you divide
around what, 8,
so
9%.
let's just do, for example, if it was 32, if there was a stock that was 32 vol divided by 16, that's 2. That means the market is expecting about a 2% move per day.
Mhm,
That's the
mhm.
expectation. So if it's 135, then the market is expecting 135 divided by 16 is how much? What's that, about 8.5?
8.56. Yeah.
Yeah, 8.5. Okay, 8.56. That's close. 8.5. So 8.5 percent per day. So stock moved 6% today. It was probably up a little bit more. So it might have even hit his expected range for the day.
Right.
So that's just a, something that a little trick you can sort of think about what you're buying,
Nice.
divide by 16. So here they're buying, looks like they're buying the February's, and they're buying way out of the money stuff here, which is maybe that they're buying these, or maybe again they're doing the 1x2. You see how more volume here, 5,000, 7,000, 3,000, then 11.
Mhm.
Let's just see what they might be doing here.
Could that be the
Yeah.
same trader doing on both of these?
I don't think so. I mean, this is, it actually, I'm trying to think if it is. I mean, it might not be. I'm just saying that,
Mhm.
that it's a thought that I have when I see that the way the volume is lining up. But it looks like this is a straight buyer. I mean, 946, he trades here, and it trades, well, first let's just go back in time. So let's just look. So he comes in right around here. These things are trading 36, 37, 33 cents. I don't think somebody's trying to sell these at 39 cents, frankly.
Right.
It doesn't, like, who wants to sell 30-cent options right now with these stocks? They're going up to 100. Not many people. So my initial thought is that they don't want to do that. He tries to buy what looks like 1,000 here. He's nibbling. So it's 30, 62, 65, 66, 88, 89. So he's trying to buy 1,000 here. He comes into the market, he takes it up, and eventually he pays 800 on 39, pays 39 cents for 826. And then he wants more. He's hungrier, and he told, somebody has stopped him on where he wants to buy him. So now he's buying 2,200 more, 53 cents, 1,200 at 78. Look how he's taking them up. So this is all somebody buying, in my opinion.
Mhm, mhm.
Okay. No spreads here. Implied volatility makes a dramatic move from the first level to the second level to the third level. See how the market makers will move it up. They're going to
Mhm.
move it up. If you're going to pay 131, they're going to show you 133. When you do that for 800, the next 2,000 come at 145, and the next 1,200 come at for 153.
And he doesn't really seem to care that the price is going up as much.
At that, the implied vol is not going up. So that always goes to show
Mhm.
you that, I mean, he just doesn't care. It doesn't matter. It doesn't matter what this number says to this guy. He's willing to pay. In his mind, he's willing to pay 75 cents or whatever.
Be
On average, this is going to be, might even be 50-cent average, right? 50, what is that? It's probably this average that he's doing right around here. Oh, because he's paying 92, 86, 88. So he's probably saying, I'll pay 75 cents for this. If I can get 70 cents, 75 cents, I'm happy. I'll get 5,000, and then I'll watch. Maybe he knows of some news coming out, or he just thinks that, these are February. So he doesn't even get earnings. So he's just thinking that there's momentum in the name, and it's going to start moving. Maybe there's another, I don't know. Maybe there's another story, and we'd have to start looking at the news articles now, right? Here, let's just here. Maybe there's the answer right here. Specialist in manufacturer light detection ranging. We know that. SPAC. We know that. Responding to Velodyne's announcement this morning. Okay, so they made an announcement with a multi-year sales agreement with this company, Emerson. It's part of the business model to get new customers and new people. And so people are excited that they're getting customers. And this is part of the news story where everything's going. Whether it justifies, so it's difficult to say how financially significant today's news is, whether it justifies bidding up Velodyne. That's what they're asking. $370 million this morning on a small contract.
Mhm.
They did less than $100 million in sales over the past year. It was roughly 45.5 times sales. So now they're just trying to throw in a fundamental bent saying this thing is expensive. Just be careful. They announced an agreement, but it's, is it worth that much? You know what the people at Wall Street Bets say?
I don't care.
Who cares?
Exactly.
Do we really care? Do they say, the next thing I know is, do you know how many cars need, lasers? You know how many new cars, there's going to be 1 billion in the next, 5 years. So
Right.
of course they don't have any revenues or earnings because it's all on the come. It's all over the next couple of years. And this one partnership, is proof of that. So, it's hard to, we're in a time where fundamentals don't really matter, frankly. You're trying to find a story and you're trying to figure out whether the story makes sense. So where were we here? Let's get rid of this. So Velodyne, they're buying the 25s. They're buying the, you got to look for these types of numbers, 32, 37, 42, 48, and then add a little bit more because of sort of that your confidence level has got to be a little bit higher than just this is break even on a risk reward basis, these numbers. So if I'm looking at the 25, 30, 35s, say if I'm looking at, let's say the 30s, right? I still got to think around $40, $41, $42 or so. It's still got to be, see how that works?
Yep.
You're paying for something that's 20% out of the 25% out of the money, and you're paying 7% for that. So you're already up through 30% break evens. They're forcing you to pay up for these names with that type of volatility. So we look at VLDR. Is it V? Oh, sorry, I wrote the wrong thing. VLDR.
Yes.
Velodyne. Okay. Look, this looks like a momentum trade, and it looks actually not bad relative to, some of the other stuff I see, but this looks like it's trying to climb here. And it looks like November, over the last 2 months, you've had this move up back from 12. It had to move up here in September. Then the EV thing all the way from 12. This is, new government and EV investment by Biden's administration. So you got 12 to 31, and then it holds here several times at 21 and a quarter, 20, call it 21. So you have this sort of bull flag, and it's trying to break through here. The volume is, so for half the day already gone, is not bad. I mean, you could see that yesterday's volume, today's volume, but there are sellers, right? There's, this thing trades up and then it's sold off. This thing trades up, it sold off. It's not ending, when it's up here, you see how, and it's really spiking, it's ending at the highs on good volume. So that's what you'd want to see, but it's starting to try to break this. It just might be creating a bigger triangle where it's here. Now this is the point, we'll have to see, but the MACD to me looks pretty good too, because this is trying to turn. So you have this up here, and then this is trying to turn. So in the next 2-3 weeks, it's either should be, trading 30 plus, right? Because this turned, the volume is back. You got to sort of have a little bit of imagination when you're looking at technicals. But yeah, I think it's eyeing 31, 32. And if it gets through that, then you got 21, 31, and you get your 41.
Nice.
Makes sense to me, right? You see that?
Yes.
So it makes sense. It's how do the options look and whatnot? And I'd have to dig a little bit further. I'd like to hear with some of these, I got to start going into, I haven't, to be honest, heard the CEO speak. So I would say, go look at the earnings transcripts, listen to the CEO. It takes 10 minutes and you'll hear what the CEO had to say in the last earnings. And then what I would do is I would skip the CFO's comments. CFO is going to talk about the numbers and in general, whatever he says, are you going to disagree, agree? I mean, whatever he says, it is what it is, right? So,
Right.
who are you going to say that he's wrong or he's right, or no, earnings are going to be a little bit better, or a little bit worse? Like, how do you know that? You're not going to be able to tell. So, but what you will be able to tell is whether or not the CEO's vision and his story. He's the storyteller, right? So you're going to tell, you're going to be able to tell whether he's believable. He's believable. He's likable. He's honest. And then you can dig where he was in the past to see if he's a good CEO, what has happened in the past. This is how you sort of determine whether or not you want to believe that story or not. Mm-hmm. So I would say that this has an interesting story. It trades 45.5 times sales. So it's not about fundamentals. It's about the story.
Right.
All right.
Cool.
Good. So that was A to Z. That's what you have to do. So that's your homework.
Yes.
Um,
Okay.
let's go through a couple of those.
All right. So after EV, I would look at retail, and I got two. So Kroger and TJ Maxx. They popped
Kroger,
up. Right.
Kroger, grocery store, Kroger, huh?
KR. Yep.
Okay. Let's see here. KR,
It was somewhere there.
KR.
Yeah,
Here.
there it is in the middle. Yep.
Okay. KR. Oh, I see. February.
Mhm.
So it's interesting, right? So you could see it, right? The good ones, the ones that you sort of want to start paying close attention to, is the ones that just pop out. I mean, right? You could see it immediately pops out right here. It says this one's, which one is different? This one is clearly different. Right? So what's going on here? You click, we see that the implied vols are all up. So that means the board is higher. What do I see here? First thing that I see is I see a put trade. I see a call trade. I see a larger call trade, and I see another call trade, and I see open interest. None, 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 none. Here, this looks, it might be like maybe something's closing and adding. We have to check here again, but this looks like somehow it looks like somebody's thinking about some spread here. Okay, that's what it looks like to me. That somebody is thinking about some sort of spread. And if just by looking at it, I would think just by looking at it, my guess would be that they're selling the 34s. They're using that to buy some sort of 1x2, which we said to 36, 38, and maybe doing like 40 calls, buying this to break it up a little bit. Something like that is what I would think, because there's no open interest. So this looks to me, you see that there's not a lot of volume in Kroger. So when you see 27,000 options and they're all here and it's like 1, 2, 3, somehow I think it's one person and everything is related.
So
That's
do
my
you think
initial
they
thought.
might have owned stock? Now we
It
went
looks
up.
like this is one. It looks like where they might own stock. Now, this is a big institutional name, Kroger, and a lot of big players in the name. Obviously, the one name that comes to mind is probably BlackRock. Let's just see if there's anybody. Now we just go to holdings. Let's see if anybody has. Am I there? No. This is see who holds it. Sorry, my internet's been a little slow, so maybe it holds up. Okay. Yeah. We'll let that go for a little bit, see what happens. But where am I?
Slow for me too, so it might be their website. I think their website is.
The website's okay.
Yeah,
It's snowing here, really badly snowing in New York. So I'm not so excited about that because I don't like to shovel, but I got to get the guys to come in and pay them. That's a whole nother story. It's so ridiculous. I can't, it's not that I can't get the guys to come. It's just like, I used to shovel snow when I was a kid. When I was 12 years old, 13 years old. I had no money. Me and my friends used to go out there and try to shovel snow to make money. And we charge like $10, $20. And today the price is like 100 to do, it's like, what? Just slam the door on the guys. It's like, what are you talking about? I used to do it for $10. All right. Anyway, sorry. Side note. Kroger. Yeah. I said, man, prices have gone up in years. Okay. So let's take a look at this 10. All right. So the volume looks like it trades up a little bit here. Let's see. It's up for the day, 37. And by the way, the thicker the stock, the bigger the stock, the harder it is to change the implied volatility. That's a 37 vol. I mean, this is at 37 is probably, I would actually think 37 it's probably a little bit high for Kroger anyway. But okay. So it looks like, let's take a look at 950 here. We're seeing some volume. It actually looks like, I mean, you see that it's on the bid here coming into it. The prices being, prices paid or sold 74, 70, 66, 63. It looks like on a bid right here. Okay. Then it looks like we can't tell 35 and a half. Let me just see something. Okay. This one it's not convincing me that it's a buy, frankly. I actually think it might even be someone selling it.
Steve said that Buffett holds a lot of Kroger.
Yeah. Oh, Buffett. Yeah. I don't think he's doing this, but yeah, it's a big institutional name and people could be selling it. But, the dividend is here too on February 12th. So there's a dividend here. So people just might be doing the double dividend thing. where they're just basically they get to collect the dividend and they want to sell some premium too. I'm not convinced this is a buy. It looks like it could be a sell. That's first of all. You see all the bids are all the bids are look like they're mainly on the bid. So that's telling me that's one of the things that I'm noticing. The implied vol is up, but is it up? Let's see. When does it go up? It starts at here, 35, then starts going up, down 34. I see 34 over here at 10:30. So where were we at 10:30 here? So yeah, stock was going up, implied vol is going down. It looks like this might be sellers here. So
I just looked it up, and it says Vanguard and BlackRock are the top two holders.
yeah, but they're the top two holders on like 80% of the stocks in the world. But it did it pop up for mine? No.
No.
I
looked it up on CNN.
Okay, you looked it up on CNN. Okay, so I'm not convinced that that's a buyer. So that's first. So let's just go there. That was this one. How about the 38s? 38s trade here at 11 o'clock. 11 o'clock, 7,000. 38.3, 38.3. This one is a little hard to tell, to be honest. It's this traded mid-market. I'm not convinced that it was a buy. So what happened after it traded? It traded at 75.50, 75.58, traded 68 cents at 11.10. So at 11.10, what did the stock do? Can I see that? Is it going to allow me to see it? Let's do it this way. The stock did 36.29, 36, 36, 45, 45, 46, 44, 45, 40, 54. So for 7 minutes afterwards, the stock actually traded up. So it's right around here. So it looks like this was a sale and the stock traded up. So now it looks like this was a sale. I'm more comfortable saying this was a sale. So I actually think that this might have been a spread, but it wasn't marked as a spread. So sometimes you see this actually it wasn't a spread. It could have been because this traded at 950. So it looks like trades here. I don't know. I'm not convinced either way. I think I can argue that it might have been a sale or a buy. So I unfortunately I can't tell you this one, and so I'm not gonna get too much deeper into this. I can't tell. But let's take a look at this. I would think that's also something to look at. So this was implied vol 37.5. This looks like a buy actually. So you see how this like the vol shoots up to about 37 and over here. So something tells me these are all the same guy, to be honest. And it tells me that he's messing around his stock position. So let's just like look at Kroger. Okay, so stock had a monster move here. So maybe it looks like somebody's actually hedging their position a little bit or taking some off. Basically taking some stock off and maybe doing one of these. Where were we? Doing what I said. Take some stock off and then put this type of trade on 1x2 or something like that. Right? Or they do this and do this first in the morning, and then as the stock goes up, then they sell these.
Right.
Something like that. Okay. Either way, I think they're all related. Some guy is just managing his risk because the stock just went from 32 to 36. And as you see, stocks, Kroger doesn't usually do that.
Why don't we take a look at TJX? It looks a little bit better than Kroger, in my opinion.
TJX?
Yes. And it's going to pop up right away. The March, you're going to take,
Sure. Another one that you see, it's like very clear
but
what
the chart looks more promising for the upside, and then you see those calls bought.
Okay,
maybe.
so these calls, let's see here. Calls, yeah, now these look like they were bought just from eyeballing, right? The IV is going up, stock is going up right around that time. Let's take a look here. Here's the volume trading all over the place, but it's 38.1, 39. Yeah, the vol is up for the day. So this looks to me like it's a buyer. So TJX calls, buyer, 25,000. Yeah, this is a big buyer, 12,000, 15,000. Okay. Yeah, so the stock shoots from 64.80 up 90 cents. So I would say this is a buyer. So, we're more interested now. We can look at, if they're going to buy 72.5 out through March. Let's talk about 80, 80, 82. Okay, so talk about $82 on this. Maybe they're a little more confident, so you can even get to like 80. So let's talk about 80, 82. See this?
500%ish.
Yeah.
Not bad.
Okay. Yeah. So let's talk. Maybe even 79, because I'm also looking to see, trying to get that there. So it's trying to fit like where 100. If these guys are looking for 150 to 400%, you kind of want to be in that range. So maybe they're a little bit more confident than we think, and we can reduce it to like say 79. So now, that's the analysis, right? That's what we need. Now the second step is to try to erase our mind. Let's look at the chart, and can it get to 79? I gotta tell you, first look at that chart, I didn't really like the chart. Just this, I don't know. This my first look at that chart doesn't tell me that it's great. Okay, so
Why is that?
look, why is that? You see this right here. You see this move right here. This is a sharp move. I don't see good volume, so it looks like maybe there was news, or without knowing anything. There was news, and it was actually there's too many people leaning short, or willing to sell it, and you see the volume is not big here, so that's weak, right? A big move like that should have like big volume, right?
Okay.
So that catches my eye, and then when it rolls over, it's like rolling over, and it goes right through the 50-day. See this 50-day moving average? It doesn't even stop. Like it literally goes. You're talking about a big move in this stock. It goes from 68 to 66. This is a decent move. And these things don't move, like we're not talking about Nikola here. So talking about 70 to 68, 68 to 66. Doesn't even stop for the day. Tried to yesterday come back, and today it's again offered, down $1. So with the stock market up, right? So what's happening here? Now you're reaching this level right here. So maybe, if you're trying to be positive, I'd say 64. Okay, he's got a hold or so, but I don't like this. You see this MACD? See how that's rolling over as well? That looks like it wants to cross to the negative side. You see that?
Yep.
Okay, so I don't know. That's my eye just looks at that and says, doesn't look so promising. Doesn't look so great. But maybe so when I see that, let's just go back a couple of years, because I want, we talk about gaining perspective, just to understand. So here is a weekly. Now, this is good, right? Up here, fights all the way back, gets up here. So this is the level, 63, 64. I mean, it's got to hold this level in order to continue being positive. So maybe someone is, now we can go back to, okay, so now we would have to look at the story a little bit and read and go through some of that stuff like that. But my impression is TJ Maxx, right? The stock has been good, and all of a sudden it's trading a little bit weak here. Someone could be buying these marches and actually selling stock. Okay, it's sort of, you see how it's outside of this range.
Yep.
So it shows me that they want to pay the least amount they can. You see that I'm trying to think what they're thinking. I've built something that says, hey, this is the one they're looking. They'll either, if they think it's going up to 79, like they would buy the 67 and a half, or even, maybe the 70s. You understand? But instead they chose the 72 and a half. It's way out there, which is telling you that they didn't want to pay that much. Okay. So if I'm sitting at the desk and I'm thinking, all right, TGX Max, we just bought it in March or wherever we bought it, and and we wrote it up for 30 points, wherever, how much we wrote it up. And now, you know what? Let's just get out of this TGX Max. Maybe there's other retail names that I want to buy. And I don't want to, it just traded 71, right? It was just there. And so maybe it does shoot back up, and, but I don't want to put up a lot of money. And so I'm just going to buy these 72 and a halves, and they're $1.40 or whatever they are, $1.25, and I can sell my stock. So I'm going to sell 1.5 million shares or 2 million shares, and I'm going to buy these 72 and a halves, and I'm going to go sleep at night because I just took my money off the table, right? 2 million shares at 72.5 is 72 million bucks. So they might have been doing that already, by the way. So meaning they might have been the seller. So let's show you this. Stock, nope. Stock goes to 71. 5 months I'm going to go. Okay, so we got to think like these guys. Stock goes up. We're long for a while. Stock goes up. We made money. Stock goes up. Stock goes up. See this big move? It's sold, right? It's sold. And so this move comes up for whatever announcement and it starts being sold. Let's say I'm the guy who's selling that stock. Would I buy calls here right now? No,
No.
I would. I'm selling the stock, so I'm just thinking I'm going to sell the stock for the next 15 days, and it's or let's call it 12 days. So I see this. I'm selling the stock. I sell it. I sell it. I sell it. I sell it each day. Every time it moves up, I'm selling a little bit. I'm selling how many shares trade a day? 5 million shares. So I'm selling 250 to 500,000 shares a day for the next 10 days. Okay, because I want to reduce my position. Maybe I'm BlackRock and I own 10 million or maybe I own 20 million shares. I don't know. We can look it up, but I own X number of shares and I just want to sell 30% of it, right? So I'm going to sell 3 million shares on 10 million. So I'm going to sell 30%, but I know 3 million shares. I'm selling it each day for the next 10 days. And on the last day, we're here and this is the last day. I am almost done and I'm going to be done by the end of the day. But you know what's going to happen after I stop selling? After me, BlackRock, stops selling? What's going to happen? There's not going to be that sell every day. So it might actually trade from 65 back to 60-ish.
Mhm.
Okay. If I'm to 72.5, maybe I make a little bit of money. Maybe it trades back to 71. They're just sort of taking off something off the table here. They've been doing it. Now that the thing's depressed, now they buy those 72.5 calls because when it was when it was 71 over here, those 72.5 calls were $2.50, $3. Right now, they're $1.40 or whatever it was, $1.25.
Right.
Okay, so that's how someone would think if you owned. You always have to put yourself in a situation where I own 10 million shares. What do I do? Okay, I got to get out of 30%. Okay, sell 3 million shares. I can't sell it in one day. I'm going to sell it over the next 10 days. You sell it over the next 10 days. Stock is obviously down because you're selling, and now you're going to buy some cheapies, one and a quarter. Maybe you're my trader on the desk, and I tell you, hey, if you can make some money trading around TJX and trading around what we do, go do it. That's your job, right? You're supposed to make me a little bit of money back because we're moving the stock down. When I sell 30%, I'm moving the stock $7. That stinks. I've lost money on just because I want to press the sell button. So I'm so big that I'm selling it. So now when I sell it, and you're the trader, and you see where you've pushed it all the way down and you want to take a flyer on some cheapies, go for it. Go buy 20,000 and we'll see how it goes.
Well, that makes sense. But my question would be, why are they selling it?
Why are they selling what? The stock?
Yeah, probably made enough money that they were aiming for, and now they're
It's
trying to
what
get
I
out,
ask you. Let's just go back to logic. What happens when you are what happens when you are buying options and you get to 100% or you get to 200%? What I say, sell it. Why? Not because you don't like it, because you made a lot of money. And the number one rule is to take your money off the table when you can, right? Not when you have to, when you can. And so they're selling it because they just made a lot of money, and there might be something better to buy over there. They want to buy Target or Walmart or whatever it is, the competitor to TJX Max. They're going to say, okay, you know what? Reduce that position, and we're going to take that money now, and we're going to put it in that position. But while we reduce that position, stock went down, buy some cheapies, buy some calls. Maybe we make some money back if that keeps running and things keep going. So it's risk-reward adjustment, and then they're finding something else to buy.
Okay,
cool, so it's not something I look at that, and to be honest, I don't get completely excited because I see the stock has been trading lower. Now they're buying the calls because the stock traded lower. It could just, they could still like it. I'm not saying that they're out. I'm just saying that, and you know what might be a good thing to look at? Go take a picture of TJX Max and go see who, and we're going to see, you can look at holdings channel. You can take a snapshot of the holders, and then the next new holders that comes in, you could see who reduced. And when you see who reduced, if it's BlackRock, and then you see BlackRock also had calls, then boom, we nailed BlackRock. That was what they were doing. Okay, doesn't mean that BlackRock's getting out, and doesn't mean that they don't like TJX Max. It just means they made a lot of money, and right now it's good to just reduce that position and keep the notional amounts of each trade. Something like Tesla, for example, goes up 500%. It can't be your whole portfolio, Tesla. So as it goes up and Tesla becomes 2%, 4%, 5%, you got to lose a little bit. You got to sell it. And if it comes back down, okay, then, it reduces and then you can buy some more. So this is how these guys think. And this one is not telling me that that they think TJX Max is. This one's just telling me that we know we pushed it. Maybe we get lucky here and kind of make another buck back of these or $2 or whatever.
Okay.
All right.
Yeah, great analysis. Thank you.
And by the way, they can also, if it does get back now to 70, because that's where they wanted to sell more, the order may come in. These guys, they give an order like, I want to sell, but it's not like just sell 30%. But if it stays at 70, I would sell it all, right? That's how the order may have came. The order comes to you and it says, Marco, we have 10 million. Can I sell them at 70? We're like, oh, I don't know. 70s to get all that stock off is hard. But the order may be at 70, I would sell them all. So now, if the stock moves back up to 72, whatever, they're going to be selling stock at 69, 70. Okay. So this is, again, it's a risk reward adjustment, and they're playing this. It's like a massage. They're massaging their position a little bit to make sure that they can get out.
All right.
All right.
Nice.
All right. Good. What's the next one? We got one more.
Yeah, let's do one more. Yeah, just
I
for fun.
I got to charge you for this one. Go ahead.
It's extra. It's fine. It's fine. CCL.
Okay. CCL, Carnival Cruise Line. Okay, let's look at Carnival Cruise Line. And then we can get we can answer a couple questions too. So I'll do CCL quick, and then we can figure out a couple of questions, so we can see.
Yeah, actually got one that's pretty good. Okay.
Okay, give me 1 second to just take a look. CCL, what are you looking at? The February 5s. Exactly, looks like that's the one that stands out. These two, I don't like the 1 weeks, as I just told you, the 2 weeks, but the stock, again, another stock doesn't look great to me. Okay, the stock doesn't look like it's awesome. I'm looking at this going, oh my gosh, I love this stock. One, it's under the 50-day. It traded in this flag. It held $20. You see 20? Very simple. 20, 20, 20, 20, 20. Bam, it's through 20. Why? And it's decent volume here. Decent volume. The MACD is now coming to the negative side, trending lower. Not super excited. I mean, just by looking at that, I'm gonna. Okay, they're buying these for 35 cents. So it could be something like the same thing. Buy these for 35 cents, and we're actually selling stock. Stock is off today. Usually, when people buying calls, and they're buying a lot of calls, they're pushing the stock up, right? By definition, everybody's buying calls just outright, not volatility. They're buying calls. The person selling the calls has to go buy stock. So it's putting upward pressure on the stock. So something's telling me here, it's going a little bit reverse. Yes. Okay. We can say that they're buying calls. I don't know that they are, but let's just say that they are. Okay. Volatility is up 10 points, about 80. Okay. Let's just assume they're buying calls because this is going up, but they're buying cheapies. And, these calls are only, 35, 40 cents. Okay. But the stock is down. And so they might be buying those and selling stock. These hedge funds, by the way, are crafty. They could be trying to signal like call buying to drum up also. People follow the hedge funds know that people follow their trades. Right. And so the smart ones could be a little tricky, and they could throw, in order to create some sort of, in order to create volume, in order for them to sell you stock, they go buy those 35 cents, 40 cents, and then they're selling you. They drum up interest. People start looking at this. They buy calls. Everybody's chasing because somebody just bought 25,000. So, I'll buy 100. I'll buy 100. Let me tell you, if it wouldn't surprise me if someone who works at one of these hedge funds is on WallStreetBets and he's saying, hey, take a look at these Carnival Cruise Lines, and somebody's buying 20,000. It's legal to say that. You're just telling the world, hey, look. And everybody goes, whoa, buy Carnival Cruise Line calls. And then all of a sudden you get 1 million people, and of 1 million, you get 5%. Say, yeah, let's go buy a one lot. You got 5,000 options to buy, right? Is that right? Or is that 10,000? Might be 10,000. I can't do the math right now. Yeah, 10,000. So you get 1%, then you buy 10,000. 5% would be 50,000. There you go. There's 50,000 options. So maybe it's 2%. Out of 1 million people say, oh, I like that. 21 calls. Somebody bought 25,000. It could be. Remember, if I get you to buy the calls, you're buying stock. I could sell you the stock. So somebody might be wanting to get out, and they pay 40 cents, and then tomorrow they might just get out of those options, and they lose a dime. But they would have never been able to drum up 1 million shares of interest up at that price. I'm not saying that's happened here. I'm just saying it could happen. Okay. And I'm not saying it does happen. I'm just saying if I just thought it, it's likely.
Okay, that actually ties into the question pretty good. So Hemant asked, what are your thoughts on filtering information?
Who?
Hemant, I think.
Oh, Hemant.
Hemant.
Okay, Hemant. Okay, Hemant.
So
Amon. I
he's
think it's Amon. Amon. I don't know. We don't
I'm
have
not
a.
sure.
He's gonna
Yeah,
have to tell us how to say it.
in
Okay,
my
go ahead.
language, we say it as it. So,
All right.
he's asking about filtering information and using
Yes.
it to trade. And by information, he means Wall Street bets type of thing.
Yeah.
So that's also my question. Like, should we keep in mind the Wall Street bets presence when we're looking at UOA?
100%. You have to
things like that?
respect anything that's able to move the market. 100%. And same thing. You know, Amon's not thinking about something that the smartest guys in the world are thinking. I mean, Amon might be one of the smartest guys in the world, but there's a lot of smart guys are attracted to making money, and so some of the smartest guys in the world are on Wall Street trying to figure out ways to make money. And one of those ways is, everybody's thinking about how do I scrape or how do I get that the millions of people and their dialogue. How do I scrape that and figure out what's real, what's not real, where the momentum is butting up, where it's not. I even think there's some products out there that are that do that and say, hey, this is hot, this is not hot. But WallStreetBets has created something that is it's incredible, it's phenomenal. I like seeing it. I like seeing people excited about finance and options and making money. My role is to simply try to help people understand to understand how to maybe extract a little bit more value, what to be careful of, who the opponent is. And in this case, if you're trading on Robinhood or trading these places, Citadel needs to make money. Citadel, for example, it was just on an article I read that they made $6.7 billion. Most of that is coming from the Robinhood flow. So it's interesting if you want to know how they make money. And then you can probably put that into a model as well, right? To try to front run probably what Citadel's doing. So all of this stuff, I have the mind to create what I would think a model do. I'm not a computer expert and I don't know how to actually code or any of that, but I have consulted for major quant funds that ask me my thoughts, tell me about what you know about the options market. And I tell them all the things and the tricks and whatnot. And they love it because they got to feed the computer with information and with process, right? And so they hire me and all they do is ask me questions and all I do is talk, they tape it. And, they go and take that information and go create their machines. But I think that there is a lot of value there. There's a lot of value in understanding what the crowd is thinking, and frankly, AI could sort of take that information and make it very valuable and give AI a couple of weeks and it's going to understand, this bubbling conversation is more valuable than this bubbling conversation for whatever reason that the AI machine finds. That's what AI does, right? And so, or it'll know this person was in this one and, he's pushing and this, and it can find these things. And so there's a lot of value, and WallStreetBets, what they've created is frankly incredible. And it's awesome. It used to be Yahoo chats back in the 1990s, the chat rooms in Yahoo, but the Yahoo boards, but this is so much bigger and fun to watch. And this is truly a David versus Goliath story. I feel like I'm in a David versus Goliath story where I'm showing people things that are radically different than what they've heard over the last 20 years as far as options education. So I feel like I'm in that. So I have a lot of empathy for what they're doing and their movement of we slayed a big hedge fund manager. Man, you took that, not a big one. You took down one of the best over the last 4 years. Like that to me is incredible. It's awesome. It's like, frankly, you can have tangents of like a movie, where they would come up and they'd find who these guys are and they would be their own characters. And I mean, it's pretty cool. It's not cool to be the guy that they take down. He's just like, whoa. Never thought this would happen, but I think there's something special there, and I think that it's fun. I think that there's a lot of young kids that have made a lot of money, and from experience, that money can go quick because what happens is this is a fast game. And the more money you make, I read an article on Bloomberg that a lot of these kids have made so much money that they're actually trying to give somebody to a financial advisor and say, I'm done. Give me some interest for the next 20 years or whatever and make it grow. That's one part. And then there's the other group that, you're just getting bigger and bigger and bigger to make the bigger money. And I would just say, be careful, just be careful and try to do what you did, right? If you just took 3,000 and turned it into $1 million, there's no reason to try to get so big so quickly and try to turn $1 million to 300 million or whatever that number is. As the game gets bigger, what do I always tell you? Up here has to get comfortable. Okay. You might be getting comfortable. Your thoughts about how you're going to spend the money is going to be comfortable. I make $1 million. When I have 300 million, you know exactly how you're going to spend it. But what happens between $1 million and 300 million is all up here. So I would say, you know what? You got $1 million, 3 to $1 million. Fantastic. Take 900,000 off the table. You could do a lot of damage with 100 grand, a lot of damage. And, play the 100 grand game for a while, if that's what it is. If you took 3 to 50, play the 15 grand game, you do a lot of damage. And I think that for a young person, you don't want to, let me tell you, some of my biggest personal gains and losses were huge. And I did it during the 1999 roar and crash. And, you lose sight. I made 5 grand today. I lost 3 grand. Oh, I made 20. Oh, I made 700, like in a day. Like that becomes, I lost 500 in a day. Like, you start losing respect for money. And I'm going to tell you something very important. Once you hit that level and you're starting to make you become numb. And more importantly, you can no longer go back. This is an important lesson, man. This is as important as it's going to get. You can no longer go back from making 5 grand to a day and losing 5 grand a day or whatever you're doing. You can no longer go back to making $50. You can no longer go back. That is the same in, it's a gambling type of mentality. It's the same in sports betting. In sports betting, when kids start at high school, you bet $1 a football game. I used to play in a game of poker in New York City, and the guy next to me was betting $10,000 a game, and there was 6 games on, and then there were the 11 o'clock games on the West Coast, and it was like I would just watch him, and I asked, I said, when you started, how much did you start with? He said $1. Right. Now $10,000 per game. It didn't even faze him. God rest his soul. I was watching the game where literally Kobe Bryant broke his ankle in the first couple of minutes. He had just put 10 grand, put it in 10 grand, and Kobe Bryant hurt his ankle, taken out of the game, and he was like, ripped up the ticket. He was like, that's gone. And I go, because without Kobe, they think they were playing like the Warriors or something. It was like a very strong. It's interesting. So, this is the same type of mentality you have to protect here. So as you make money, you can't just jump, because it's like, even though you're a great baseball player and you're playing in AA and you're great in AA and you can hit the 95-mile-an-hour fastball, when you get to the majors, it's 99, 100. That little difference is so fast, and you got to walk up to there. That's why there's a progression in professional sports. Call this a professional sport. And part of it is up here. So that's your lesson for today. What else?
Good. Thank you. I say we finish it off on a high note.
All right, man. Good. I will talk to you guys tomorrow. Be good.
All right. Thank you, Felix.
Yeah.
Bye.